If you like charts, if you like graphs, if you like potpourri of all kinds of interesting things that are happening in our world, around Tesla, around the economy, around the stock market, around human behavior, well, then you've come to the right place. Basher, so thrilled to have you back on this amazing Thursday.
It is great to be back. Thanks for having me.
And you've told me that people should wait till the end because there's going to be two mystery items that you didn't even share with me because they're so mysterious.
Actually, there's more than two, Randy. I've got some surprises for you today.
Some huge surprises.
Yeah, and I've got a couple things you're actually going to have to think today. You're going to have to. There's going to be some quizzes for your mind today.
Oh no,
putting it to work.
Not that. Well, it's this early too, because remember,
Yes.
you're way ahead of me. You're 3 hours ahead of me, so it's really early for me. Although I have already done one show, I suppose. I'm always a little worried that starting a show at 6:30 in the morning could strain some of the neural network, you know. But anyway, Cern, I'm going to just let you share the screen, and then we'll see where we go from there.
Okay, and as we have started to do, I want to start off with an image of consequence from part of week.
Yes, this was a definite image of consequence.
Yeah, this is 29-year-old Noland Arbaugh, and he's the first person to get a Neuralink implanted in his skull. And they showed a video last week of him talking and playing chess with his mind at the same time.
Yes.
So that was pretty amazing. It's pretty exciting. Neuralink could do some pretty amazing things for some people, and then to see where it goes beyond that will be great too.
We're hearing I think yesterday I was seeing some postings that there may be some videos coming up where he's going to be more or less operating his computer with his mind almost the way that you or I would, in terms of pulling up different apps and checking out different use cases of things that he could do. But it'll be interesting to see how he's progressing.
It's going to be fascinating to see what he's capable of doing now, and certainly he's excited, and it's so beautiful and so gratifying to see his excitement.
Yes.
So it's fantastic. Yeah. So speaking of chess, I just want to warn you, if you do play chess, just to take a look at your opponent's pieces first before you play. There might be a surprise there if you are playing outside. That piece there in the back might move a little differently than the others.
That's fun.
So just be careful. Just a word of warning there.
Yes, so, yes, indeed. Yes.
Whether you're playing with your mind or not, just be careful. Okay. 100 some years ago, we had the Roaring 20s, and some people are suggesting that we might see another Roaring 20s, or maybe this time it's Roaring 30s.
Yeah.
History isn't exactly the same, but it may rhyme. And back then in the 1920s, preceding that, we had, pandemic, we had a Great Depression, and then the war and so on. There was a whole lot of different things going on, and we have had some similar things this time around. Not a world war, but certainly wars. And so the question is it possible that we see another roaring period in the economy?
Yeah.
During that time, the Dow rose 500%, so it was a pretty significant increase. Yeah. Now, of course, this chart doesn't show what happened after 1929.
Right.
That was pretty bad, but let's worry about that later. So certainly Nvidia is having a roaring 20s of its own, all by its very self. And so right now, analysts are forecasting annual revenue will be about 130 billion by 2026. Mm-hmm. And last year they're actually printing 2024 numbers, so about 61 billion for the fiscal year that just ended. So a doubling of revenue in the next 2 years for Nvidia. So we shall see how accurate this proves to be. So of course, this is on the backs of AI and what's going on there. And Nvidia last week had their developer conference, or maybe that was 2 weeks ago now.
Yep.
Um, and I thought this is pretty amazing. This is a chart of many of the companies that are working with Nvidia, partnering with them, and many of the names that you would expect, the Amazons and the Dells of the world, Oracle, Microsoft, Google, et cetera, all the big companies. But I was gratified to see that I was represented here as well. You can see Cern, the Cern logo right there.
Yes. It's not very bright. It's not very bright, but it's
Not very bright, yeah, and that's probably the hardest one to see, but nonetheless, very important in the whole scheme of things.
yes, very, very important.
Of course, it has nothing to do with me, but I always get a chuckle out of that when I see the logo. It's interesting, the vice president of engineering at Amazon Web Services tells us that the world is adding a new data center every 3 days.
Holy man.
So pretty astonishing, right? People talk about how sort of data is the new oil, and here's one data point that sort of points us in that direction in terms of the infrastructure that's being built out.
And of course, the electricity required to run those.
That's the big concern. Yeah, and we're now hearing from many people the concerns about that, whether the infrastructure for that can keep up with the demand. The good news is Nvidia is doing their part. They're developing systems now that use less power but still have greater capacity. So hopefully Nvidia and other providers can reduce the power consumption of their products. This chart we have looked at before. This is up to date as of yesterday.
Okay.
It's today's market close. So instead of now 3 laggards, I guess we have only 2. Apple and Tesla. And I put out a post yesterday and I said, the perceived AI leaders of Nvidia and Meta are leading the way and they're doing great. And the 2 perceived AI laggards of Apple and Tesla are bringing up the rear. And I sort of asked the question, will that persist? And I think the answer is an unlikely no. I think those companies will get their AI acts together, so to speak. In Apple's case, they will have their developer conference in June. I'm pretty sure we're going to see some announcements from them. Certainly in Tesla's case, many of your viewers will be very familiar with what Tesla is doing in the AI space. So there's definitely hope there.
Yeah, we would certainly, well, let's just say that almost every video I've done in the last couple of 3 days has been around the fact that Tesla is in almost undeniably the leader in AI and AGI, that there's nothing even close to being as sophisticated as FSD version 12.3 in terms of its ability to understand the world, its ability to plan, its ability to execute, and the speed with which it does all 3. Nothing comes close.
Yes. The other thing I would just mention too on this chart, these top companies, these 4 companies that have outperformed the index this year so much, Nvidia, Meta, Netflix, and Amazon, they all are coming off a very difficult period a year and a half ago.
Yes.
They all went down significantly if you look at the historical price charts for those 4 companies.
And Microsoft, well, it didn't have a soft period. Microsoft was kind of off of everybody's radar. It was kind of like, Microsoft just, maybe shouldn't be in the magnificent anything. And then all of a sudden it's number 1. So it's kind of interesting.
Amazing how things change. Yep. And then for Tesla, we're seeing more and more announcements for jobs in bots and AI in general. This was one that was kind of interesting. It was a job for an engineer, operating system engineer for autopilot AI that also relates to the humanoid robot and beyond. So certainly Tesla's continuing to hire, and it's pretty clear what direction Tesla's headed with this.
Right.
I posted this kind of in a response to a post that Alexander had, he said, it's funny how one can predict the future by reading job postings. And my response was, well, every day things are pretty much the same until one day they aren't.
Until they aren't. Yeah, yeah.
So there's an image here of a few dinosaurs on their smartphones. If only dinosaurs had smartphones, they might have prepared.
That's right. That's right.
Okay, so this is a rough shifting of gears, but here we have an image of a ship about to go over a waterfall, a massive cliff of water, and the ship is labeled national debt. And inside they're saying, and this is the best case scenario.
Well, you're a tad clairvoyant, because a big part of my show earlier this morning was about what's happening, what in the world is happening with gold, why is gold going crazy, and maybe it has something to do with this very thing.
It may well. It may also help explain the move in Bitcoin as well, partly.
Right. Mm-hmm.
Yep. Okay, so we now have more central banks joining the party and cutting rates. So I think we might have mentioned last week that Switzerland had cut rates. And now we can add the Czech Republic, Brazil, and Turkey to the list. And also on the next page, we can add Mexico as well.
Okay.
Not that those central banks necessarily are leading, but the Swiss central bank certainly is an important one. And so their interest rates in Switzerland are already pretty low. But this may be a sign of things to come, or as we'll see in a minute, maybe not.
Okay.
Okay. But just continuing with this theme for a second, this indicates here that the central banks may be set for the most synchronized rate cuts since 2008.
Okay.
Tell
us about 2008, isn't it?
Yeah, 2008 wasn't such a fun time. All central banks basically cut rates to pretty much zero. But yeah, so we'll see if this is the case. Now, it would certainly be good for mortgages. Mortgage interest rates have gone up quite a bit, and they still remain pretty high. Although, again, historically speaking, these rates aren't that high.
Right.
7% mortgages. But you do have to go back, 20 some years to get to that range.
Right.
So there are definitely a lot of people today buying houses that have never seen these kinds of high interest rates before.
Right.
Speaking of home prices and homes, the Case-Shiller 20 City Index, overall, I think is doing pretty well. The 1-year gain is 6.6%.
Mm-hmm.
And home prices over 5 years are up 50%. Strong markets over the last year include San Diego, Los Angeles, Detroit, Charlotte, and Chicago, the top 5.
Yeah.
Okay. So, and the index is showing that it's at an all-time high, which is kind of interesting because the median price of a new home is down about 19%.
Yeah, so this one always throws me off, Cern, and you're a statistician, you like all these charts and things. To me, the median price that a new home is selling for is only indicative of what builders are building.
Yes, that's right.
So your builders right now may be looking at, maybe they might be seeing a situation where the luxury home market is more saturated and where the starter home market is a little more available. That could be 100% responsible for this lowering of the average price.
Randy, without knowing it, you just passed my first test.
Aha! Look at you.
Well done. Well done. Yep. And then home prices versus affordability. Again, back to the Case-Shiller index at an all-time high. And then the housing affordability index is rather low right now relative to where it has been.
All right, I'm going to throw out, just for fun, I'm going to throw out my theory on this. I think I've talked about it 6 or 7 months ago on this show, but I don't think I've talked about it since. The amount of money that people pay, even though they're paying a lot more than they were a year ago or 2 years ago for food, and maybe they're paying a little more than they did 2 years ago for gasoline. If you go back to the 50s and the 60s and the 70s, as a percentage of your income, what people are spending on food, what they're spending on clothing, what they're spending on healthcare, what you just go down the line, even automobiles, or let's call it personal transportation. We're spending about the same as a percentage of our income on personal transportation, but we're going twice as far, and we have 2 cars instead of 1. So almost every category except for education and housing, as a percentage of your income, has gone down. Well, what that does, in my opinion, this could, maybe I'm completely wrong. I don't hear basically any other economist talking about this, but if you have all of those other percentages of income going down, you have this amount left over. So let's say you used to have 30% left over for housing, but now you've got 40% left over for housing. Well, you could take that 10% and put it in savings or investments. You could put it into jewelry for your hands, and you could do all kinds of things. You could travel more. There's all kinds of things you could do with that 10%. But one of the things you could do with it is bid up housing prices if the inventories are not substantial enough to pull that back down. So my theory is where the affordability of homes has to take into consideration that shift that we've seen in terms of what we're spending, what percentage of our income on.
That's a good theory, and I am not going to dispute it today.
Okay. You're going to work on it and come back and get me later.
I reserve the right to dispute it at a later point in time. Now, this is also kind of interesting. The home buying costs are growing twice as fast as incomes.
Wow.
Right. So this is probably something that's not sustainable. Right. But, for a while it can persist, like a lot of things persist in the short term. But the median household income is the blue line. It's kind of gone up, slowly, steadily over time. And the red line since 2022, kind of when things thawed after the pandemic, the income needed to afford a home has gone up. So yeah, it's definitely putting the squeeze on.
I would think so. So at some point this has to break.
Yeah.
Yeah.
And then in terms of existing home sales, year-over-year change, it's now down about 3% year-over-year. And that's a downtick from the improving trend that we'd seen where it bottomed out at minus 36% year-over-year. So the housing market has seen some big swings.
Yes.
So probably still on its way to getting back to whatever normal is at this point.
Well, yeah, as you and I have talked about before, though, many times, part of the problem here in terms of home sales has to do with inventory, and you can't just manufacture more inventory overnight. The way that you can get a lot more inventory on the market would be if existing baby boomers started to sell some of their homes, but they have no inclination to sell their homes. They own them outright, or they've got a 3% interest rate, or they want to die in place. So it's really hard to get these folks busted out of these homes.
Until we invent digital homes, that's going to persist.
Right.
Yeah. And then shifting gears to used cars. We've talked about how the price of a used Tesla has gone way down, but we're also seeing some thawing in used car prices.
Right.
This is a high used car index. It peaked at 257 and is now down to 202, which is the lowest level since March of 2021.
Mm-hmm.
So things are improving there too in terms of used car prices.
Right.
Up to the pandemic-induced highs.
Okay.
Okay, so it'll be interesting to watch that and see how low it ends up going.
It should normalize.
Yeah.
Right.
Yeah. All right, so inflation is a cartoon here. Inflation, the guy's pushing inflation up the hill, but the problem is he's also pushing a big barrel of oil. And so that's certainly a contributing factor right now to, sticky inflation among a few other things. Chocolate prices, for example, we talked about last week.
Yes.
Big part of that. Now,
so let's think about oil just for one more second. I did bring it up again in my program this morning, but the Russians have cut another 500,000 barrels a day. So that's a total of almost 1 million barrels a day that they've cut from what they could be producing. And Saudis and the other members of the OPEC plus group are continuing with their cuts. Now that's being huge amount of that is being made up by the US, Canada, and some of the other non-OPEC nations. But the reality is this morning we had oil up $1, probably in response to the Russian number. Predictions now from some are saying we might be going back into the 80s and 90s.
My advice to them would be to get their money out of the ground while they can.
Yes. Yes.
This next chart is the projections for where electric cars will be. This is the Bloomberg, I forget what NEF stands for, Bloomberg Foundation of some sort, economic foundation or something. They're projecting 20 million EV sales by 2030. Okay.
I'll be shocked if it's that low.
Yeah, so that's a good point, because last time they made this projection in 2016, they projected just under 5 million global battery electric vehicle sales in 2023, and the actual number was 9.1 million, so they missed it by over 4 million. So if their track record is any indication, then instead of 20 million, it might be closer to 40.
Yes, and I'd be surprised if it's that low.
Yep. But that would certainly be good in terms of lessening the demand for oil globally. So, all right. Now, here's a little bit of a fly in the ointment, potentially, in terms of hoping that interest rates will be cut. There is some evidence that and I'm not sure why this is labeled, I guess it's S&P Global, but it's the U.S. Manufacturing PMI Index, is showing a pretty strong uptick in the month of March.
I think it's important, even though my crowd hears me talk about the PMI index all the time, it is the Purchasing Managers Index. So these are the buyers for companies making decisions about how much to buy for their companies, whether that is in terms of the raw materials or the finished products that they need in order to ship to wholesalers, ship to retailers, ship to consumers. Everybody's making these decisions for the future in terms of what they need to buy. So these are the purchasing managers, their analysis of the future.
Correct. And any reading above 50 means expansion, and any reading below 50 means contraction. And so the manufacturing sector has actually been in recession really since, towards the end of 2022.
Yes, absolutely.
Right. So even though the economy hasn't officially gone into recession, manufacturing did. So, it may well be time. And we're seeing some evidence now that manufacturing activity is picking up. And to further support that, the Philadelphia Fed Manufacturing Expected New Orders Index moved up a lot as well. Has now hit the 50 number. And I'm not sure if 50 in this case is the dividing line between expansion and contraction. I think this might be a little bit different. But this is the outlook. So people in this space are feeling a little bit more optimistic.
Right.
Okay. So the Fed is seeing this too, and they may be saying, well, okay, the economy really is hotter than we think it might be in some areas. Yeah.
Well, in particular, I think they were hoping that manufacturing would just kind of putter along and services would fall. I don't think they wanted manufacturing to go any lower, but they were hoping services would come down to meet manufacturing at some kind of a flat line. Services is coming down a little bit, but now you've got manufacturing popping up a bit. Now it's not across the country. So the New York Fed, that one wasn't as nearly, in fact, it was negative again in February. So we'll see.
Yeah. And you're jumping ahead just a little bit. We'll
okay.
actually discuss that in more detail in a second.
Okay.
I thought this was an interesting chart showing that if CPI had continued on its 2% trend from 2020, where it would be, the index level would be at 281, but inflation is actually 11% above its 2% trend at 311. So, will inflation come back to trend at some point? That remains to be seen. Or will it just stay at 10 or 11% above that 2% trend and just go up from there?
Yeah.
we shall see how this goes. It may be higher for quite a while. Okay. There's a theme to my cartoons today. They're debt focused. So here the husband is saying to his wife, "We've got something money can't buy," and she's holding a baby, and there's another child in a high chair, and her response is debt. And his shoulders are rather hunched, so he's feeling the debt burden as well. Yeah.
You know, when I did that study comparing the what we spend our money on as a percentage of our income in the 50s and 60s versus now, I didn't check how much we were spending spending on children. And the joke might be, if we went back and looked at that, we might have been spending as much on 4 children as a percentage of income in the 50s and 60s as we're spending on 1 child now.
That's a good point. Yep.
Well, sir, we're going to stop there because I think, you know, there's only so much people can, you know, get into their head at one time, and then they might miss some of the answers to your quizzes later in the show. So we're going to stop today, and we're going to continue this tomorrow. So thanks for, you know, putting these slides together. They certainly are fun to go through, and I hope the folks out there like them too.
My pleasure. And I would just ask that maybe we give Scott Walter a call and wake him up.
Oh, does he not get up till noon?
No, he if he was watching this, he probably fell asleep. So we need to give him a call and wake him up.
I see. That's why we need to wake him up. All right. Well, everybody give Scott a call, and we'll see what's going on with Scott this morning. All right. Thanks again, Cern, and until tomorrow. It's been great talking to you.
My pleasure.
If you happen to be a big fan of the Cybertruck, you might also be interested in this super fun Cybertruck refrigerator magnet and bottle opener. It is made out of super thick stainless steel, just like the Cybertruck, and it has this giant magnet on the back, so it's going to hold a lot of stuff on your refrigerator. It's an amazing gift, and it comes in that great gift box that you saw before that uses a magnet opener, just almost like an Apple box, you know, like when you get Apple products. You can buy it on Amazon for $29.95, or you can buy it direct from me by sending $25 to paypal.me/Randy Kirk, all in lowercase letters. Please indicate whether you want the stainless steel look, or maybe you'd like to have this very clever camo version. And then if you're not in the US, please add $20 for freight. If you'd like more than one, please check the information below to get pricing, as well as all that information I just told you will be repeated in the information below. So once again, think about joining the channel, getting the up-to-date Tesla news every single day. I think you'll be glad you did.